Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with some exciting news that you can benefit from today. MarketClub has teamed up with PMI, a leader in the education field, to offer personal coaching for MarketClub. And now you don't have to be a member to benefit from this coaching. That's right, now you can have your own personal coach and learn the many secrets of MarketClub. So give us a call today, 877-219-1482, and see if personal coaching is right for you. That number again, 877-219-1482. Okay, so let's get on with the 1 p.m. update for Wednesday, the 3rd of August. Well, what a great markets we've got here. So let's start off as we normally do with the S&P 500. You may have heard me say this many times before in my previous broadcasts, and that is they slide faster than they glide. This is true in the futures markets, the metals, currency, and of course the equity markets. Yesterday we saw the S&P 500 close dramatically below its 200-day moving average, which we've been pointing out for weeks now where it is. We also had a sell signal on our monthly trade triangle indicator. Today we saw the S&P 500 break below the recent lows seen in August of this year. Now the S&P 500 is lower for the year. And it still looks like it wants to go lower, but we'll talk about that in just a moment. Metals, on the other hand, rose dramatically as everyone jumped at the same market at the same time. Gold traded to a new highs with silver pulled behind it, but not going to new highs. These are volatile times in the markets, and perhaps we've seen the first wave of the first thrust on the upside. With the apparent slowdown in the economy reflected by the equity markets, the CRB index and crude oil were the opposite. They were pushed to the downside. Now, I just want to say this. We have some very exciting markets right now. These are the type of markets you can both lose and make a lot of money in. So you want to be on the side where you make a lot of money. Once again, we're relying on a proven trade triangle technology which always catches the big moves. Okay, let's go to the charts and let's see what's going on right now. As you can see, we have the S&P 500 indicator here, and I'm just going to scope this out to a little further, so 6 months. And as you know, we've been talking about this for weeks, and you only have to look at our other broadcasts to know this is true. We were saying basically you had our 50-day here, 50-day here, 50-day here. We felt this is going to be a huge top, head and shoulders top. We said this is the left shoulder, the head up here, and the right shoulder. Okay, this is a regular Western chart. We can simply go back to a candlestick chart. But you can see we've actually broken through the neckline. Well, this is the 200-day moving average right here. We broke through that convincingly yesterday. We also broke through the lows here earlier today. However, I don't think we're going to close below that. In fact, I wouldn't be surprised to have a rally today and possibly tomorrow, which is definitely going to be an opportunity to go short this market somewhere along the line. It's very heavily oversold. But generally speaking, there's our monthly trade triangle right here. And that was yesterday at 12.58. Market's currently at 12.44. Not a big move, but it's just starting in my opinion. So here we have all of our indicators. Monthly, weekly, daily, minus 100. Strong trend. Please pay attention. If you're in the equity markets, still, you need to get out of them right now. If you care to go short, you may get a chance to sell this market just a little bit higher, but we'll watch that very carefully to give you some clues on that. The market is, however, and I'll clear this off the screen, the market is, however, oversold. You can see right here. And I would not be surprised to see some sort of bounce. We had a 38.2% retracement. We're looking for a move down to the 1150 area, which is a 61% retracement right here, and we'll have to reevaluate the pattern from there. Now, what I would expect to happen in this market, let me just go back to my illustrator, clear the screen and go back and show you what I'm looking for in this market. A typical pattern like this would be some form of recovery, but it would look to create a flag on the market. So I think you could maybe see something like this, and then another big push down. The market is not over with by a long shot yet, so please be patient and please watch this market very carefully. There's lots of opportunity to make money and lose money, so please pay attention to these broadcasts. I think we can help you on that. So let's clear this off the screen. Let's go to our next market. Next market is going to be silver. Silver really hasn't done a lot. Certainly hasn't made new highs like gold. We're at the top of the Donchian trading channel. We're getting very close to another dollar high. I think it's probably a 62% retracement. And we had that retracement with a Fibonacci indicator. We've talked about this before. We took it from this high here down to the lows. 42.90 is a 61.8% retracement. We're not far from that area. I think probably we may have seen the thrust for the moment. I think we'll maybe see this market come back a little bit, but it's not as strong as gold, and that's the key thing right now. It's not moving to new highs, which we'll be talking about in our next market, which is, of course, gold, which has all the limelight right now. There's the gold market. Huge move up yesterday. We took partial profits on our position, which we said we were looking for. We were looking for the 1650, 1645 level. The market is higher than that, I understand, but we're still net long. However, it looks to me that we may see this market actually at a high. I know it sounds crazy to say that right now, but I think we may see, for the moment, some sort of profit taking in a possible pullback, certainly in the next day or two. But certainly it's acting very, very well. It's not a market to short. I'm not recommending going short, but we may see some more of a pullback. You see the action so far. The high today so far today was 1672, and we're currently trading 1666, which is $6. Not a big deal. 1667 right now. It just changed. So we're off about $5 from the high. Not a lot in the scope of things, but generally speaking, it would look as though this market may have a little more building to do before we go to another level. We've talked about this for a long time. We mentioned this, if you remember. If you look at our previous broadcasts, we talked about this being a very important energy field, which of course it has been. The breakout was right here, and it looks as though it can go higher. So let me just take this off the screen, get my telestrator, get back to what we want to show you. So clear that off the screen, take that off, and let's take that off. But this is level right here was the breakout. It sat on the breakout, boom, went up. It was a pretty easy move to catch. You can see our trade triangles along from 1430 longer term. Of course, we've never had a signal since we've had this buy signal, which is way back here in March of this year. That's for long-term traders. 1557 for shorter-term traders, intermediate-term traders, I should say. So you've got over $110 profit in that market right now. And lastly, for very short-term traders, 1628. That's about $40 profit right now. So looking very, very good. And again, we've talked about the PSR, the parabolic stop and reverse. This is a place where you should have your stops now. If you're a short-term trader, certainly that would come in around the 1608 level, which is obviously quite a ways from here. This will accelerate to the upside probably the next day or two. So let's go to our next market. And the next market we're going to be looking at is the crude oil, which came under pressure today. All of our indicators are negative. We're below the 200-day moving average. However, we are at the low end of the range here, and I think this is particularly important to look at. You're also, if you go down here, we are very oversold. And let me just put some things in here that I want to show you. So here we are. We're at the low end. We're oversold like we were here and here and here. And this level right here is right around the 90 levels, a very, very important level of support. I think that's something you really want to pay close attention to. So right here, 90, I think the market will find support. We may see a couple more days of sideways action, but generally speaking, I think we're getting close to a low in this market, and we'll see a bounce. We've seen a lot of money change hands, not necessarily good trading, but changing hands in terms of trading money as opposed to particular markets. So let's take this off the screen, go to our next market. Lots going on, folks, so you really want to pay attention to the markets as we talk about them. These are the major markets we cover every day. Whoops, clear that off. These are the major markets we cover every day in a 1 p.m. update, because these are the markets that move the markets. So here we are. This is the dollar index. We've talked about this before. We felt that the 200-day moving average was the predominant technical indicator, which comes in right around here. And you'll see in our notes to traders, we felt this was a bearish engulfing line, which is right here. Whoop, hold on, I've got to get rid of that parabolic one in a second. And just give me a second, we'll take that off. Let's clear everything off the screen. Let's start again, get a clean screen, then we can show you what we're looking at. So this particular area right here, oh Lord, excuse me. Let me take this off one more time. I'm sorry to do this to you, but let me just get this off. Just a lot going on in the market. Clear it off here. We'll clear that off there. Take this off. It's all simple once you do it. But anyway, let's go back to the telestrator, and let's go in a little bit closer on this because I really want to show you this. We can go to 1 month. So this is what's called a bearish engulfing line. So we had the move up here, which surprised a lot of people. The dollar was strong yesterday. Now today it's under pressure. This line right here actually engulfs the previous line. It's a candlestick, Japanese candlestick chart. And once you get this level here coming through here, it's a bearish engulfing line. Now tomorrow, if we close lower tomorrow, then this will be actually confirmed as a bearish engulfing line, and we're going to go around and challenge the 73.50 level, which is a major level of support for this market. So please pay close attention to that because it's going to be a very, very important level. Hey, this is Adam Hewison. Lots going on. You really want to pay attention to the markets. I want to just say a couple more things quickly. We have our show tonight. We hope you can watch that. Our Market Club show. We'll see you tonight at about 5 o'clock. And also we'll be right here tomorrow. But lastly, I want to just tell you one more time, there's a great opportunity for you to really benefit, and that's with our one-on-one Market Club personal coaching. We've teamed up with PMI, a leader in the educational field. All you have to do is just call us at 1-877-219-1482 and see if personal coaching is right for you. I think you'll be surprised at 1, how good it is, and 2, how inexpensive it can be. It can be more expensive not to take this personal coaching than not take it. So here's Adam Hewison for Market Club. I'll see you tomorrow, same time, same place, and I'll see you tonight at 5 o'clock on the Market Club TV show. Hey, thanks for stopping by. Have a great day trading.